Coca-Cola's chairman and CEO, James Quincey. Good to see you, James. Thanks for joining us.
Good morning.
So you saw the strong pricing, which everyone expected, and we're seeing across these consumer names, but also volumes came in as well, which may be a bit of a surprise. What did you see during the quarter that drove it?
Yeah, we had good balanced growth. We had the pricing, and we had volume. Volumes were very robust. Latin America, emerging markets like India. Actually, consumer was still resilient in Western Europe and growing. Even here in the U.S., we were able to balance out affordability and premiumization and get a pretty strong result. So there is still a lot of global growth out there that allowed us to continue to bring people into the franchise. And frankly, it's growth that we've earned with our marketing, our innovation, and our commercial strategies.
Pricing, though, is strong, double digits. We saw this from P&G on Friday. How sustainable is that, especially in a world where we're seeing disinflation?
We are seeing some disinflation. Some materials have come down, but COGS that are very important to us, like sweeteners and juices, are still substantially ahead of prior year. Overall, we see moderation. We see the input costs moderating as we go through the year, wages moderating as we go through the year, the kind of cost of media moderating, and in tandem, we'll see our own pricing moderating as we both cycle last year's strong price increases and the marketplace, particularly in some of the developed economies, starts to go back to less off-cycle price increases. So I think we're going to see, if the central banks deliver on the environment of a moderation or a soft landing, then I think we are going to see both come down in tandem through the year.
And it will go into your portfolio, because some are wondering, food and beverage inflation has been so stubbornly high, whether the companies like yours, but everyone, are keeping prices high in the face of falling costs to preserve profit margins and profitability in this environment.
We're very much focused. I mean, COGS are still going. Let's start on the basics. Costs are still going up for us. Costs this year, taken all together, we expect to increase by mid-single digits compared to last year. So there still is a residual follow-through of higher elevated increases in costs compared to pre-pandemic times. We're very focused on earning the ability with our consumers to take those price increases to move those costs through. But our strategy has been very much about passing the costs through rather than anything else, and to continue to try and keep our consumers in our franchise. We're not in favor of trying to do big, violent movements one way or the other.
You just mentioned the term soft landing. So does that mean, James, you're not seeing real concerns that you would typically see around consumers going into recession, say in the U.S.?
I mean, there are pockets of consumers in the U.S., in Europe, that are clearly under pressure in terms of their purchasing power and starting to exhibit buying patterns typical of kind of the early recessionary phases, whether that be trading down to private label or putting off the purchases of large ticket items. Having said that, there are other people who've got the purchasing power or who are deciding to spend. So aggregate demand is there. I mean, it's one of those things where we've been talking for at least 3 quarters about a landing that's 2 quarters away, and here we are still expecting it 2 quarters away. So yes, planning on a moderation towards the end of the year, a soft landing, if you like, but it's been predicted a few times already, so we'll see how it plays out.
Yes, we've been expecting it for a while, but I would say you typically, with a good global view, you warn about the macro economy, and when things start looking tough, you get more cautious on the consumer. I think it was notable that you reiterated guidance. I know it's early in the fiscal year, but does that mean you're not seeing sort of globally signs of worsening economies?
We don't see an overall aggregate reduction. Of course, I could point out a couple of economies or groups of consumers that are under pressure, but there are other world that are still doing well. I mean, so for every country that's doing badly, there's an India which is doing really strongly, and so there are, Western Europe, I think, benefited from a slightly milder winter, so it came strongly. So overall, we do not yet see a global slowdown. Clearly, there are places under pressure, but we see the consumer is standing together pretty strongly at the moment.
How's the China reopening going? What do you see on the ground there?
So China started the reopening really Q1. Actually, we had a pretty strong Chinese New Year in the first quarter. Patterns of spend and activity, people traveling, going out, very much like the reopenings around the world. So certainly a good start. Consumer confidence still below pre-pandemic levels. So while we're optimistic on the balance of the year, I'd say optimistic that the economy there will start to normalize in a very similar pattern.
I thought it was interesting that one of the bullets in your earnings release was about this deal that you made with OpenAI and ChatGPT. How does it work? What are you using it for? And what are you trying to communicate there to investors?
Yeah, look, I think that we all know that this is AI, much like the old expression, these innovations are overestimated in the short term and underestimated in the long term. This is going to have a profound impact. I mean, you can make the adage that we'll no longer be shaped by nature and nurture, we'll be shaped by nature, nurture, and the numbers as the algorithms kick in. And we're starting to experiment. We want to be on the front of this change because we see it being profound internally for the way our business operates, the way the supply chains operate, but also how we engage with consumers. We ran an activity where we combined the chat GPT along with the DALL-E, the visual imaging things, to allow consumers to make their own Coke ads, stills, but still Coke ads, and put them up in Times Square. Hundreds of thousands of responses. It's going to change not just kind of the supply chain and the kind of transactional, mundane task, but it's going to start pushing into the world of creativity, and we need to get ahead with reskilling the way our workforce operates, so that we can take the learnings we've always found. If we combine tech and creative skills for the employees, we can do much better on effectiveness and efficiency, and this is just the beginning.
James, you used the word profound there a number of times, and I'm just curious as to why you would term it that. What is it about this technology that perhaps is different than things that you've seen in the past?
I think because it covers so many things. You can buy AI, inverted commas, that will, is a correlation and optimization machine. But this can cover so many activities because the way it can absorb not just text, but images and produce very responsive results, things that we will accept as good as anything else very quickly. We've looked at how it's going to change some of our internal processes. Give you an example. Everyone's been trying to do knowledge management for 20 years. There's research scattered all over the place, but no one can ever find it. The new brand manager has to be trained on everything. You could put that together now into an AI tool that will just bring immediately to the fingertips of every person in the company the entire knowledge of the company. And that'll allow us to be much more effective as we do strategies. It's going to get to advertising. Go on.
That's going to change, isn't it going to change the way in which chief executives are expected to communicate dramatically?
I'm sure it's going to change lots of things, including the way that may be the final corner of the cherry on the cake, maybe, but it's going to profoundly change things. It's going to change the way advertising works, the way we engage with consumers. It really, maybe not in the next 2 quarters, but in the coming years, it's really, think of how much we've changed in the 14 years since the smartphone was around. If I think about myself internally, I used to have my own servers, my own software. All of that is outsourced now. It's a completely new industry. My IT department does a completely different thing to what it did 10 years ago. Imagine if that's now about to happen to my entire marketing ecosystem, that in time, it'll be completely different. That's a journey we need to start on now. That's why I say it's profound.
What are you doing with marketing? A lot of people look at Coke as one of the bellwethers for the advertising world. I believe you've ramped up advertising spending, even in this kind of uncertain environment. Is that true? And you?
Yeah, we've definitely been increasing our investments in marketing. We're well back to pre-pandemic levels, and we're going to continue to lean into growth as that famous soft landing continues to be well in the future. We're going to continue to ramp up our investments, but not just about the quantum of marketing we spend. We've been making a big focus on adapting how we do our marketing. 5 years ago we did Coke, Coke with vanilla. Now we're doing Coke with Starlight. we're doing marketing and innovations that are much more engaging with today's consumers, allowing Gen Z to come into our franchises, including the Coke franchise, starting to see recruitment even in the US. So really an adaptation, not just of quantum for marketing, but the model and the effectiveness of the creativity.
Well, and Gigi Hadid always helps, I'm sure. James, final question for me. We were just having this big back and forth about the debt ceiling, and I just wonder, as a business leader in this environment, are you worried about what you're seeing over in Washington?
Markets always start to get nervous, and businesses prefer predictability and certainty in terms of the macro environment. And certainly that's what we would be looking for and hoping for from a Coca-Cola company point of view. We have a very robust balance sheet and access to capital and cash. But of course, there's already enough uncertainty in the world. Yep. So hopefully that it'll work itself through in terms of the debt ceiling.
Well, it usually does. Actually, it always does, but we'll see. James, thank you very much for the time today on Earnings. We appreciate it.
Thank you.
James Quincey, CEO and Chairman of Coca-Cola. As we had to break our roadmap for you for the rest of the actual week for big tech and the rally, Microsoft, Alphabet, Amazon, Meta, all getting ready to report results. How to position ahead of that?
Plus, it is a stock that is outperforming most of the mega cap tech names this year, trading at 52-week highs ahead of its earnings tomorrow. Investors need to know.
And a tale of two retailers. Bed Bath & Beyond files for bankruptcy, but LVMH, a new milestone, and what that signals about the company and luxury when we're back in a couple of minutes.